It's where you're putting your money at a lot of risk to make a big return, typically over a short amount of time. A lot of people refer to speculating as gambling, but pretty much the idea is I can win big or I can lose big.
Bro, guess what? What? I just became an investor, bought crypto. Huh. Oh, I thought you'd be proud of that. Yeah, well, it's just that you're not really an investor just by owning crypto. What am I then? A speculator. What do you mean? What's the difference? Well, speculation is when you buy assets that are very high risk, high reward though. Well then what's investing? Investing is more for lower risk assets that have stood the test of time, such as index funds, real estate. Well, what about crypto? Look man, you can make money in crypto, but I wouldn't put everything into it. That's why I have the 80-20 split. And how does that work? So 80% goes into low risk index funds. The other 20% stuff like crypto and other stocks. Yeah, okay, that makes more sense.
So are you investing or speculating? So many people make the mistake of thinking that they're investing when they're actually speculating, and that can be very dangerous. So here are 3 signs to tell you that you're speculating rather than investing. 1. You're buying simply because price went up. Prices going up, or rather just short-term price movements in general, should not be an investment thesis. And if you're basing your investment decision on that, then you're speculating. Number 2, your horizon is to get out in just a few weeks or a few months. Again, this goes back to the focus on short-term price movements. If your investment thesis is based on that, then you're speculating and not investing. Investing should always be based on the long term, like years ahead. And number 3, you panic when prices start to drop. As an investor, if you like a stock at a particular price and it falls more, then you should actually love it more at that lower price. If you're truly investing, then the short-term drop should make you happy, because that means that you can buy more at a lower valuation, which means better long-term returns. So definitely don't confuse investing and speculating, and focus on long-term investing. And don't forget to follow me for more investing tips.
We need to talk about the difference between speculation and investing in light of recent events. So what is investing? What's the definition? Let's ask the experts. Okay. Well, how about we ask a dead guy? An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Benjamin Graham. This motherfucker's going to the moon is speculation, right? That's just saying the price will go up. It's funny when people say things like, well, you're wrong because the price went up yesterday. Okay, we're not even playing the same game here. Ben Graham did recognize that some people need to speculate, so he said what you should do is set a limit on it, say 10% of your portfolio. But people are deluding themselves into thinking they're investing when they're actually speculating, and they'll end up losing most of it, like they always do.
So get this, guys. Tesla literally had its best one-day gain over the past 6 years at 20% on Monday. 2 days later, today, it dropped 17% and marked the highest drop in the Tesla stock over the past 7 years. Just look at this chart. It's literally just like a crazy row. Oh my god, we're going to the moon, and then no, what's going on? So there's definitely a couple takeaways for people that are just starting investing that I want to talk to you guys about. This is a perfect example of investing versus speculating or day trading. Tesla at this point has become a total meme stock. And what I mean by that is that all the movements of Tesla hasn't necessarily been connected to any fundamental news, but because of possible short covering and people having FOMO, the stock has just rocketed. So while yes, you can make money from speculation, you can also just as easily lose money. So when you hear about a Wall Street bet guy making millions of dollars off a $10,000 investment, he's an idiot, a lucky idiot, but still an idiot.
Are you investing or speculating? Let's find out. Speculators are seeking to make abnormally high returns on bets that have really high risk of losing all value. And investors seek to generate a satisfactory return by taking on average or low amount of risk. So make good choices.
We have a fatal attraction to what's hot and a fear and loathing of what's not. That's how we come wired from the factory, and it largely explains why humans are such terrible investors. Price and value are always and everywhere inversely correlated. In plain English, if you're buying what's hot, you are deliberately vectoring your capital towards the lowest value asset class because you're buying something with the highest price. No rational investor does that. Speculators surely do it, trying to hop onto and then off of a price trend before it reverses, and good luck to them. But investors are, or certainly ought to be, always in search of the low-priced, high-value, underappreciated asset class.
Hey guys, welcome back to my YouTube channel. In this video, we're going to cover the topic investing versus speculation. So myself, I'm an investor. I like to buy assets and hold them for the long term instead of speculating. So that's what I like to do, but there's a few different ways to look at it. And I just want to bring forth those differences and let you guys decide what's better for yourself. So what I'm going to do is start off with a clip from Warren Buffett, and then after that Jack Bogle, and then I'll come back and share my thoughts on the differences between investing and speculating.
Two kinds of items that people buy and think they're investing. One really is investing and the other isn't. If you buy something, a farm, an apartment house, or an interest in a business, and look to the asset itself to determine whether you've done something, what the farm produces, what the business earns, and so on. You don't really care whether the stock market's open. You can do that on a private basis. In fact, you do it on a private basis if you buy a farm or apartment house generally. And it's a perfectly satisfactory investment. You look at the investment itself to deliver the return to you. Now, if you buy something like Bitcoin or some cryptocurrency, you don't have anything that's producing anything. You're just hoping the next guy pays more. And you only feel you'll find the next guy to pay more if he thinks he's going to find somebody that's going to pay more. Now, if you ban trading in farms, you could still buy farms and have a perfectly decent investment. If you ban trading in apartment houses or even in equities, if you ban trading in Berkshire Hathaway for the next 5 years, our investors would do fine, over time. But if you ban trading in tulip bulbs, or if you ban trading in some Bitcoin, which nobody knows exactly what it is, people would say, well, why in the world would I buy it? And you aren't investing when you do that. You're speculating. There's nothing wrong with it. If you want to gamble, somebody else will come along and pay you more money tomorrow. That's one kind of game. That is not investing.
Well, investing is about long-term wealth creation. Speculation is a culture of trading with the other person, which we are another investor, another institution. And we know, Jim, that is a loser's game. It has to be a loser's game because if you bet A is going to go up, let's say Apple, and you're selling it to someone who believes it's going to go down, one of you are going to be right, one wrong. So the central fact of that trade is the man in the middle, the croupier, the broker, the money manager are all in the middle, and so it's not an even bet. It's a 50-50 bet until the cost of the croupiers is taken out. If it sounds like I'm talking about Las Vegas, I am. We gamble back and forth trying to get other people's money, but the house always wins. If it sounds like I'm talking about the racetrack, I am. If it sounds like I'm talking about the state lottery, the worst, biggest, greediest croupier of them all, where I take in, let's say, $100 million and maybe pay out to the winner $50 million, and the rest goes into the coffers of the state. So it obviously is totally unproductive. We all think that we are on the winning side, but since there are two people on every side, this is what people don't get about investing. It doesn't create value. It subtracts value, where speculation does, and investing adds value. Well, of course, there are 1,000 definitions of investment and probably 2,000 definitions of speculation. But the fundamental building block of that difference is investing is about owning corporations, businesses that actually exist, focusing on their intrinsic value, their ability to grow over the years through earnings, through paying out dividends, reinvesting the rest in the business, and holding corporations for the long run. That's where wealth is generated. It is not generated in the stock market. So when you have, let's call it, focusing on intrinsic long-term value as the definition of investment, speculation is betting on price, and price is ephemeral. Price is the price of a stock. It's anything but eternal. You're betting on price. You buy and sell with great frequency, while investing is a long-term process. Speculation is a short-term process. Sometimes it seems, Jim, getting shorter every single day. We now have some high-frequency traders out there who trade stocks every 15 seconds, but it may even be an average of 15 seconds. It may be trading in nanoseconds. Bam, bam, bam. That's speculation. It's not investing.
Okay, good information there from Jack and Warren. I think they did a good job of breaking down the difference between investing and speculation. So really all I can add to what they're saying is, when I think of speculation, I think of things like Bitcoin or GameStop, for example. You know, Bitcoin just was at $60,000 and it just dropped down to 30. So a lot of people who are buying those type of assets, they're looking to go into something high risk and get a high return as quickly as possible. So that's fine, but you just got to know your risk, right? And when the price does drop, if it drops, well, how are you going to handle that type of situation? So investors, on the other hand, what they're looking to do is buy assets that produce income, right? So you look at stocks or real estate or private businesses where they generate revenue, they produce free cash flow, and they pay dividends and rents and that sort of thing. So that's more of an investment. You're looking long term, you're looking at safety of capital, you're looking for adequate returns, longer time frames, those sort of things. So the other thing when I think of investing more, what I buy is stocks mostly, and when the price drops that's when I'm buying more of it. So I actually like when the price goes down. If I really like the asset and I think it's gonna be a good long-term investment, then I'll pile in and buy more, right? So that being said, you know, if you want to do some speculation, I do no speculation at this point. I got my money into a set of stocks that I consider investments for the long term. But if you're looking to speculate, you may want to take, say, 10 or 20% of your portfolio and put it into those type of assets. So you can give it a try and see how you feel about it. But I would just caution everybody, just be careful how much you put into speculation instead of investing, okay? So do what you want to do, but just be aware of the pros and cons both ways, okay? So other than that, hope you enjoyed the video, and if you can subscribe, that'd be great, and we'll see you on the next video. Thanks.